In fact, the sell-off serves me. Not much I can do with a move higher. Okay, so I know that there are a few highs that have been put in place in a number of these markets. 72.99. How's that for 7,300 resistance on the NAS? We have 1697.10. Wow, we're getting a nice little sell-off now. So this is great for a potential buy. Okay, now it seems like the Dow and the S&P are following along. Now notice I don't have sufficient propulsion dots on the 1 minute to play the 5-minute breach, right? No day at the breach here, gang. I don't have enough organization in order to say that once 935 rolls around, I could short through the low or buy through the high. Don't have it. But I just want to make really clear, the Russell is leading the way to the downside, while it seems that we're getting a lot more strength from Dow and S&P, and then even sort of begrudgingly now the NAS. Okay? So, you know, interestingly enough, then the Russell becomes the market that I actually like the best, because it's the pullback buy that's going to serve me. Now, the numbers that we're looking at for that pullback buy are going to come off of that 1697.10 on the Russell. So what am I looking then to do? I'm looking to subtract 6.5, 9, and 12. Minus 6.5, minus 9, minus 12 from that number. And that would then be my projected low. That projected low, if it represents a pullback buy, we're in business. So how do I know? How do I do that? Really simple. Grab your handy dandy calculator. I love using the Tidlick calculator on my iPhone. I plug in 1697.10 unless I'm feeling like doing the math in my head. And then, and I would actually recommend you do it on Tidlick, because if you have to readjust, it's easier. Plug in that 1697.10 minus 9 minus 6.5, and so I'll basically have 3 lines on my calculator, and if the main number, the high, changes, all I've got to do is change that. Our projected lows start at 1690.6 on the Russell. Let me give you the numbers right now. 1690.6, 1688.1, 1685.1. Those are your projected lows from the 1697.10 high. Any questions on that so far? So kind of a wonky morning where it looks like there's kind of, now it looks like the NAS is all sorts of froggy. Okay, cool, no problem. I'm gonna and I haven't calculated the NAS yet, so I know I'm getting a new high. So the calculation there, I get a new high on the ES at 2791. So I'll just keep. What I do is I prioritize those markets that are pulling back if I want to buy, because those are going to be the ones that are going to, you know, be heading towards my eventual entry, 24,901. Okay, so I've got some decent highs. Maybe this NAS. I'm going to leave the NAS to last, because moving higher doesn't actually help me. The movement higher does not help me, right? So 90.6, 88, and then 85. So I know the 15-minute Russell can't contain those downside projections. Can the 30? No. Can the 60? No, right? That would be more like an oversold buy. Can the 120? No. 180. Now, yesterday in the premium video, I talked specifically about 480 on the Russell, and it looks like we're heading right back down to that 480. Now, again, remember, this is kind of, I'm telling you right now what our projections are, and we look to be heading down towards even that minus 12, 1685.1. That would actually have us looking at a 480-minute time frame for a potential buy. Okay? It's bringing us back to the 480 correction. So anywhere between the top line of the wave and down here, the Darvas level, at 85.5 is super interesting. 88 to 85.5, this is your low, this is your average, and this is the high, right? So somewhere between the average and the high, that degree of pullback is where we are correcting into the 480. The 480 on the Russell, so let me just, so everyone hears me, the 480 on the Russell is triggering a buy right here in the clearing range with that -12, -9 pullback, that zone. You can see the recent lows, you can see the Darvis, you can see the middle line of the wave. I mean, where you want to position yourself is not going to be about really opportunity, it's going to be about risk. The deeper the pullback, the lower the risk. Okay? Now, what else is pulling back? Now, notice I'm not prioritizing the NAS at all. Let's go, though, take a look at the ES. So 2791 ES. I don't mind looking at a buy on the ES because the NAS is heading higher. So 2791 on the ES. What do I do with that number? I type it in, 2791 minus, it's a 9, 2791 minus 11, and 2791 minus 13.5. Okay? So the thing to remember here is I'm not even really interested in this thing till it gets down to 82. So I'm not kind of fretting over this yet. It just didn't get down low enough. I can do some quick arithmetic in my head and know that 86 3/4 isn't really going to be all that helpful to me. So that ES doesn't start looking interesting until we get down to 82. All right? So if we start taking another turn to the downside, and 82 is the low, gang. 82 is the low. So 2791 minus 9 minus 11 minus 13.5 gives me 2782, 2780. So we get some nice play around the minor psychological level. And the 13.5 gets me down to 2777.5. Okay? So until we get down around 82, I'm probably not all that interested. But if the NAS is up, I don't mind the correction buy in the S&P. The problem is, as I said on the onset, the S&P seems to be a little bit more country, not rock and roll. It's moving a little bit more of the Dow than it is the NAS. So I might be a little bit misguided to say, hey, the NAS is up, so that ought to help the S&P. It won't hurt. It won't hurt. We're probably seeing a little bit of a struggle in, I don't think it's, we'll take a look at our sector watch list. If XLF is down, not shocking. Yeah, it's probably a little bit of XLF giving us some fits because it ain't healthcare. So the XLF, it's probably the financials giving us a little bit of a fit in front of tomorrow's pretty major earnings event for JP Morgan City, Wells Fargo, PNC. Big day for earnings tomorrow, okay? Big day for earnings. All right, so let's see. Believe it or not, Rick, energy does not have as big an impact. It's not top 3. Energy has an indirect because energy can affect a lot of the other sectors, but energy in and of itself, believe it or not that heavily weighted when you look at the top 3 rankings. But good point to keep energy in mind for sure. Okay, so again, 82 is where the conversation gets started. We've already talked about the 480 on the Russell, okay? Anyone here not clear? 480 Russell for me is a buy. All right, next up, and again, the zone here is taking me down to 1688.1 to 1685.1. That's the zone. That's the low and average from the clearing range thus far, the 9 to 10 o'clock high. Okay? All right, we're only 10 minutes after the bell. Now, a few things to notice. The breach for the 1-minute Russell. We have the dots, gang. The breach for a buy on the 1-minute NAS here at 9:40 a.m. I've got dots on both, okay? I've got dots on both. So if I'm looking at the potential for a 9:45 breach, I'm still waiting 4 more minutes. The dots have got to persist. And which dots am I talking about? The 821 EMA cross, right? And those are your green propulsion dots, right? That's your green propulsion dot on any chart. So at 9:45, if the green dots specifically are still plotting, we have a potential breakout short on the breakdown short, on the Russell. Breakdown short on the Russell, potentially. But again, we've got to get to 45, and then we've got to still have the dots, and then we've got to break the low. I just assume we just go tag 85 and be done with it, but we'll see what happens. The other low that we put in just below the Darvas level was, let's see, I'm going to refresh this chart here for a moment. That is 1683.60. 1683.60. Okay, gang? The 945 breakout buy is valid on the NQ. Notice where and actually breakdown short has not gone. If we were, again, if we're still plotting dots in 3 minutes, and then we take the low out, the 15-minute breach, would be valid. Okay, so short breach on the 1, if those criteria are still met in 2.5 minutes. Ditto the Dow, it's a buy on the NAS. Okay, all right, so NAS is doing its own thing. And again, S&P is moving with the Dow, obviously, right? Every day it gets to choose. Crazy cousin NAS, Big Brother Dow. It's choosing Big Brother Dow. So NAS is absolutely, and if you look at the sector watch lists, consumer discretionary, gapped up, kind of moving down. Tech is fine. Qs are fine. Tech is fine. Healthcare is fine. I mean, you've got pretty much, well, look, consumer discretionary, which has been really performing well for the NASDAQ, that's probably the weakness here. It's not healthcare. It's not tech. What's dragging the S&P down? It's moving with the industrials and financials. Financials are doing it no favor. It's not moving with its tech brethren, gang. It is not. Financials are absolutely taking it down, and it's moving lower with the gap close on the industrials. So we might be really close to some of these gap closes on XLF. So some of these gap closes are looking really, really interesting on XLY, XLF, XLI. So I might think if we're going to tap the brakes, we're getting pretty darn close to it. Not quite, but pretty close. All right. Russell is hitting, what, 84? Which is fine. It's still within the parameters of the 480 pullback buy. And again, 85.1 was the low end of it. So 85.1's been triggered, gang. If you like that low end, where did that number come from? 1697.10 minus 12. 1685.1. Okay, near a Darvas, 480-minute pullback. All right. And that is that. On the S&P, the conversation doesn't even get started until 82. So no fun there. Now, at about 9:45, I can start looking at the 5, I can start looking at the 15, and some of these slightly longer term time frames. We've gapped up, and then we're starting to move lower, or any one of these scenarios. What I'll start looking for is any halfbacks, right? So for those of you wondering, well, Rog, can we get to a level on the ES that's a little bit more aggressive than your 82 hourly price movement range projected low? Yeah, about 85. Your halfback to your golden mean is 85 to 83.5. More aggressive than the 82 minus 9, but if we don't get the minus 9, look at also where that lands us in the wave. So there is some, not great, because we have pierced the wave before, but there is some relevance to looking for weakness. Okay. By the way, it's 9:45, 50-minute breach on the Russell. We could keep an eye on. Russell really taking it hard this morning. Dow would also be valid for the breach, but remember, I think we're closing in on some of these gap closes specific to some of the sectors. So remember, 9:45 just doesn't mean we shorted at 9:45. We've got to take the low out. But you guys know I hate shorts. Hear me out. I don't like shorts. Okay? these corrections are buying opportunities. Half back looking very interesting on the 30-minute. I'm using Neil's terminology to basically share what a 50% retracement would be of the last major move that we're seeing during the clearing. Clearing range, half back. Landing in the wave, that's exactly what I want to see. Okay? You can do this on any one of these markets. I mean, obviously Russell's got totally, wow, just Charlie Brown and Lucy football. That's okay. That's okay, because that's a 480. That's a 480. All right, now, one thing to also mention, our projected lows on the Russell the extreme starts at 85. All right, 85.1. S&P, the projected lows start at 82. Realize these halfbacks are going to be aggressive. So if you want to line up a halfback, or just kind of, look, when I say halfback, I want you guys to realize that we could be looking at the 382, the 50, and the 618. What I like is the 618 and 82 have some connection. They're about a point away from each other, you know, about a point and a half. But remember, your exhaustion levels, I don't want people habitually overriding HPMRs. It's just usually a bad idea. Okay? Now, realize the breach on the Dow, valid. The breach on the Russell, valid. But remember I said, gang, if we sell off, I'll be on the sidelines looking for a corrective buy. I meant it. I'll be on the sidelines looking for a corrective buy. The zone for the hourly price movement range buy, hourly price movement range, not halfback, is 82 to 77.5 on the S&P. 82 to 77.5, which means the 30-minute cannot contain all of the pullback. Everyone got me there? The 30-minute cannot contain all of the pullback. Heck, the 60-minute barely can. Keep that in mind. The 60-minute barely could. But I want to identify where those pullback buys are going to be. You know that we are going to, you know. Now, if I could get the halfback and a PMR to line up, I'm super happy. Right? The halfbacks are way more aggressive. Some days they're going to be perfect. Some days they're going to get us in a little bit more aggressively. But when they line up with the hourly price movement range, you've really got something special. Sometimes they will, sometimes they won't. And look, here's the thing. The benefit of hindsight, oh, this day we should use the halfback. This day we should have used the average of the PMR. This day we should have used the low. Right? There's no way of knowing. They're all different levels that present a different degree of risk reward. So what I'm telling you is the risk reward, basically the risk, is going to tell you which one is okay. There's no best one. Nobody knows what's going to happen, right? But you go, well, which one can I afford? If I were wrong, am I better off waiting for the more conservative version? Yes? Okay. Let's see. Next up is, and you know, for me, these markets move really quick in the morning. And I'm just taking a look at Russell, and obviously we want to buy the NAS. I mean, I would love to buy the NAS on a pullback. That's kind of obvious. That's kind of leading the way. Heads up on some of these gap closes, especially on those individual sectors. And again, I have no interest in the short. None. Like I said, I'll point them out for those of you that like playing some momentum, but I am looking exclusively at where is the pullback buy. Now, if I'm going to do that on the YM, 24901 was the high. And some of you might remember from the other day, on YM, you're subtracting 90, you're subtracting 115, and you're subtracting 140. Now, these aren't difficult calculations, and this could have been done right from the get when we have 24901 hanging out there as a high, right? So, I mean, you could just kind of get to this as you want. Just crunch the numbers, write them down somewhere, and as long as we don't make a brand new high, you're right as rain. That puts us initially at pullbacks near 811. 811 is your 90-point pullback. 786, 24,786 and 24,761. So 811 is your first pullback buy. Meaning if you subtract the 90 points from the high, your price movement range exhaustion, and I'm talking your 9 o'clock to 10 o'clock high, not anything other than that. And if I pull a quick, that's not too bad. We hit the 618. Now when you talk half back, your next levels that surround it are the 382 and the 618. Okay? Half back's at 820. Minus 90 is at 811. 618 is at 24.8 even. That's a pretty nice 20-point range. It's the down my favorite, even close, but is it meeting some of the criteria to take advantage of a major psychological level, minor psychological level, the wave, the hourly price movement range, and the Fibos? That's a lot of stuff stacked in your favor, is it not? Okay. And then when you look at the individual sectors and the way they gapped, which one's closed, which one's going to find support at the close, pretty convincing on XLI, pretty convincing on XLY, XLF as well. XLV gapped up, has no intention of closing, it seems, at the moment. So you can even break it down to the individual sectors. If you're going to want to know where I'm looking at some of the gap action, it's on those sectors, not just the individual futures contract itself. Because actually the futures contract, I look at the 24-hour. I almost never look at anything but. Okay. All right, so you guys know what I'm looking for as far as pullback. You understand the calculation that I'm doing. High minus hourly price movement ranges. Project the lows. Again, I find which time frames can contain those lows. We still have 7 more minutes until the end of the clearing, okay? 60-minute charts and even 30, I think, are doing a pretty darn good job for the ES and the YM. Now, what you're doing is you're crunching the numbers first and then going and finding which time frame syncs up with that. Crunch the numbers first, then ask which time frame is actually creating a correction. Now the NASDAQ is still flying, right? NASDAQ is just flying. Technically, I would recalculate. If I'm still looking for a pullback buy and I didn't get one already, I'd be recalculating on this high because I'm still inside that clearing window. Now I have a 73.13. So let's say we hit 10 o'clock and the NAS just kind of moves lower. Let's not underestimate the possibility of that. So whatever the high may be, and it's been kind of hard to pin the NAS down to a high except for the one that we put in at here, 310. But I can tell you a 10-point pullback on the NAS is nowhere near enough. Right? After a while, you realize the NAS at a minimum has to move 30, 40, 50 points to make any of this make sense. I don't see that in the cards at all, which is why the NQ really hasn't got on my radar, because I know that I've got to see a move to 72.80, 72.70 for any of this to even be valid. The minimum would be a 30-point pullback, right? Everything else is meeting its hourly price movement range correction levels. Dow did, S&P, gosh, it did flirt with that 82, didn't it? That low right there was 82.75. Not bad. Not bad, okay? So again, that's where I start to step in and ask myself. And by the way, 82.75, and I mentioned the 618 Fibo lined up pretty nicely, meaning they were within about 1.5 points of one another. All right? So projecting lows to the downside. All right, so 55, 5 more minutes left until the top of the clearing range. So we're still kind of dealing with the clearing range itself, but we have had some clearing range exhaustion moves, right? I'm not even, so notice I did not take the breaches to the downside. I reached. That's kind of iffy if you want to take a shot. We still have the clearing range breakdown to come, but based upon the fact that we punched up to highs, corrected lower, I like the clearing range exhaustion moves on the Dow, the Russell, and the S&P. I like those way better. I like those way better. So we're looking at clearing range exhaustion, not clearing range breakouts. That's what's happening here on all three of these. So I calculate the downside target. That is potentially support. I look for any supporting cast of characters, whether it be Fibonacci, the wave, Darvas, to help me out. I have a bullish bias. I have had that for probably what seems ad nauseum, right? Like I said, if the market melts down, I'm going to be on the sidelines. But those corrections are going to be opportunities to me. All right, so what else do we have here? 957. I'm looking for movement to the upside, gang. I'd like to see this NAS grab the S&P by the short hairs and get going. All right. And NAS did not pull back enough to give me an entry. It only gave us a clearing, a 50-minute breach, 1.5. It may give us a 30-minute breach, but I'll tell you what, I'd rather see a pullback. I don't like to buy brand new highs, especially when the market's shot up like this. I have a Dow position, I have a S&P position, I have a Russell position. I have the three markets we talked about. Calculated the range lows, looked at the accompanying Fibonacci's, okay? That area between 2783.5 to 2782, the 618 plus the 9 looked very good. On S&P, 820 looked really good on the Dow. That was the 50. It was a half back. Just 9 points underneath that was the 90-point HPMR sell-off, right? I could have probably gone 805, but I thought I might be pushing it. All right, 618, golden mean plus a major psych. I could have gone 805, but 20 points in the Dow is nothing, okay? That's what you do with these projected levels, gang. Super easy. This is not high-level, complicated stuff. Okay? All right, what else do we have here? Let me tackle some quick questions. Do I have any targets to get out yet? No, I actually don't. I'll think about that after 10:05. So for those of you that are wondering, what's the timing on my thinking about profit targets now? You know, the clearing range happens so fast, I don't always have the luxury of setting up risk rewards completely. I just basically can set up risk, right? I end up with like a kind of one-sided, risk-oriented setup. Which is, the risk is, understanding the risk is far more important anyways, but that's where I end up, focusing on the risk. Right, if I get in here, where is my stop? Reward-wise, I mean, look, I think after a corrective sell-off where we're buying exhaustion, I mean, quite frankly, some of the easiest targets would be the clearing range highs. Does that help, Top Dog? Some of the easiest initial levels would be clearing range highs, okay? 50-minute breach on the NAS. Remember I said it's NAS buy only, right? No shorts. I'm uninterested in the shorts. So no Dow breach. I want the clearing range exhaustion buy. Clearing range exhaustion buy. I know this 30 minutes went by really, really fast. It's just the nature of the market, gang. I'm not even caffeinated yet. Can you imagine? So 10 o'clock. Am I interested in the breaches? I'm really not. I'm already in any market that I'm comfortable being in, and the 15-minute breach, for those of you that were bullish on tech, the 15-minute breach was pretty much it. And even that one was iffy because the dots kind of stopped and then picked up again. That one was kind of tough. But here's the thing. If you know it's buy only, if you're looking at a one-sided market, guess what you're not right now? Short. I think there's a huge advantage. All right, so you guys know, bullish. Why am I bullish? I've been talking about it for a month. I'm bullish because when you look at the underlying market trends on the daily time frames, we're coming off of uptrends that have bounced off oversold. I respect the trend that was. We are not in downtrends in any of these markets. At best on the dailies, we're in chop. Okay? And I'm always going to respect the trend that was. Always. All right? That's why I'm bullish. I think also we've gotten you know, a lot of negative news behind us. Right? A lot of the negative news is behind us. I don't feel the need to start to aggressively play what I do believe is a 2019 inevitability of a cyclical turn down. I just think that the rest of this year is going to be pretty positive. And until I see something different on the daily that tells me that we're adjusting into a downtrend, which we're not, uptrend to distribution carries with it a bullish bias. So that's where that comes from. Hope that helps. Same thing I've been talking about, gang, for easily a month. All right, same idea. I am long I'm along every number that I called. Russell, Dow, and S&P. I'm not in the NAS though. I really thought about it, but it kind of lost some of its edge. And I thought, well, I'm in the S&P. The NAS was for sure where the clarity kind of, I mean, I kind of wish I grabbed the NAS too, but I've got a lot of contracts across these three right now. And I thought, well, if I can, look, here's where my bias kicks in. I like to buy pullbacks. The NASDAQ was not a pullback. It's a momentum play. I don't like momentum plays. So even though it might, in hindsight, end up being the good one, this is where my bias might actually sometimes hurt me. I like to play pullbacks, right? Exhaustion plays. And by the way, for those of you that are asking me, where are particular specific potential targets? Look, your S&P is at one right now. If you grab the S&P at that 618 plus to 2782 area that I was talking about, that one was tricky because we didn't hit 82 on the button. We did hit the 618, 83 and a half. But if you grab that, 90 is this area right now. Take 89 and change off the table. You don't have to get flat, but you can realize a profit up here, kind of going back to, like, say, Russell or S&P or Dow. Same idea. Now, my Russell is nowhere near retracing its move enough yet. And remember, that was kind of a longer-term correction play. It is slowly getting back up there. When the Russell gets to about 96, top dog, you can look in about 5 more points. You can look for an exit on the Russell when it gets to about 96. Okay, here at 90, 89 and 3/4, whatever, on S&P, if you're in, yeah, take something off the table. It's about 5 points you just got. Yeah, grab it. Okay? I wish I could tell you I was in NAS in any meaningful way. I'm not. Dow. I would tell you that on that 811, you know, go take a look at the clearing range high. You know, look at where the whole thing, kind of the scene of the crime, if you will. I think that you could probably look for something around 890 is fine. 890 would probably be a good exit. So we still need another 40 points. All right, still need a little bit more of a bounce. Look, I got to tell you, even though we're, you know, call it 20 points, 25 points from the 20, some of you might have taken that 811, 30 points in the Dow is nothing. It's irrelevant. It's noise, right? You got to think about your hourly price movement ranges. The same 90 points that I was willing to see the market sell off by should be in some way in alignment with what I want to the upside, gang. Now, if that's too much, then go ahead and you can pull a Fibbo again, right? Now, let me show you. So now you're going to turn it around. We did the previous Fibbo looking for where the support was. Now I want to know where's the resistance, right? And actually, that 860 is interesting. I've got a couple of Darvis levels in that area and a 618. Look at that. So before we pulled Fibonacci looking for support. Now I can pull Fibonacci looking for resistance. And you see we're kind of tied up in this 50. We're tied up in that halfback area between 50 and 618. I still think we're going to move higher. But if you're wondering, are we going to run into some trouble there? Yeah, it looks like it, around 860. We're struggling. We got a Darvis overhead, 618 overhead, etc. So that's how you can flip it around and go, okay, Fibonacci, what say you now? Okay. 90, like I said, 90 on S&P is fine. NAS continues to head up higher. S&P should track a little bit higher with that. We're kind of stuck in this 60-90 area on the Russell. Well, I don't know. Is there a halfback issue here? Let's see, Russell. Are you dealing with a halfback? 50%, gang. Yeah, there you are. Kind of stuck between that 50 and 618. Okay. Again, it's green on the 1. It's looped back around. I still am very bullish. Let's see what we get to the upside here. And remember that this was actually built on the 240 or 480. Sorry, 480. All right. For those of you that have never watched me do the open, it is fast paced. There's a lot going on. There's a lot of number crunching, etc. I do get that. But here's a cool thing. If you never see me do it, the first 30 minutes was absolutely recorded. That would be a great 30 minutes to go review. Okay? I opted for the clearing range exhaustion because I had longer term time frames that were giving me different elements of a corrective move, whether that be FIBA, whether that be a move to the wave, etc. So I liked the clearing range exhaustion. If I have a bullish bias and I get a sell-off, the first thing that's going to go off in my head is the buy alarm. And I start projecting my downside lows, my hourly price movement ranges, like we did in that fairly frenetic 30-minute period, and that is what gives me my buys. Okay? I'm not interested in the breaches because the pullbacks gave me exhaustion versus clearing range breakout. I'd rather play the exhaustion. That's my wiring. If someone says you can buy something on, I'm going to prefer that. You can buy something high with the hope that it's going to go higher. I don't like that. I know for it, but generally speaking, I know where I kind of gravitate towards. I love the retracements to the wave, to a Darvis, to a halfback. That's on here. Okay. So if you like the breakout, cool. I think some of these clearing range exhaustions are even better because then right about the time you get to your breakout level, you can take profit and then see if we catapult higher after the breakout. You know, that's what I really like about that. It gives you a whole lot more options, and your risk reward is far better on the correct is on the breakout. Not that I don't. That's part of my trading plan too, right? And I've added Neil's 5 and 15-minute breaches that I've done for most of my career, the 30, right? With the 5 and 15, need a certain amount of organization on a 1 minute by way of propulsion before I can do it. All right. Let's see. JC says, I would need a retest of the low. I would need a retest of the lower minor RTY to be interested again. Absolutely. Yes. Yes. JC, you got it. I'm out for a nice profit. Thank you. Hey, don't thank me. Well traded. Well done. You're the one pushing the buttons and moving the mouse around. Next up, Warby Parker said, breakout triggered today. Yes. Yep. It's going to be better, but I like the pullback buy, right? I like the pullback buy. And I don't like how lethargic the Dow's being, but our upside target on that 820 to 811 range is 890. 890. Darvis in play in front of the major psychological level, and it's also an 886 Fibbo retracement. Russell's being a little lethargic, and that's probably the one that I've taken the biggest risk on because there's something going on there that it just ain't happy about. Now remember, the #1 weighted sector in the Russell is the XLF by way of the financials, right? So financials are having a hard time. Yeah, Russell's having a pretty hard time. It's not moving with its tech brethren, nor its healthcare brethren. Russell's kind of having a hard time, but that's a 480 pullback, and we got a very nice, deep, -12 hourly price movement range entry in that 85.1 area. So if anybody's looking at this going, I don't like this, Rob, you've got about 4 points to say, thanks but no thanks, $200, take your ball and go home. No problem with that. Okay? If you're saying to yourself, wait, everything else seems to be kind of a little bit better, it's retraced, at least a lot of its move, but the Russell's being lethargic, I agree. You've got the alternative now to take about 3-4 points off the table and get out if you don't like it. Okay? ES, I called 90 as a ceiling because it retraced the move. That's where you at least take some of your profit off the table. Not a bad little trade, and then you see what's next. I'm not saying get flat, but you see what's next. The Dow is being a little lethargic too. But the nice thing about the clearing range exhaustion plays is you're in from, say, 820 at worst. And when this market's coming down, you might say, oh, yuck, but you've got 20 points. Take them. Take your ball and go home. Yes? If you don't like it, you have the latitude to say, hey, I could actually end this morning if I pull the plug on every one of these trades that I've got, I'm profitable on the morning. That's a damn good feeling. That's what exhaustion entries give us. A really good risk reward. Okay, and I got to get going in about 18 minutes here, probably a little bit less than that, gang. Actually, give me just a minute here, gang. Just give me a minute. I'll be back in just 1 minute. I haven't taken a break since 8, and I need something. I need a little water. Just give me a moment. All right. All right, we're back. Where's this market? You guys keeping this market up for me for a second? Oh, who dropped the ball here? All right, we're not really doing much. I got to say, we're not really doing much there on the post 10 o'clock action. I mean, I like the clearing range exhaustion buy because the breakout is tricky here, gang. You know, the breakout's tricky here. I think if you can play a clearing range exhaustion, when you get that hourly price movement range correction into a, into a Darvis, Wave, and I'm showing you guys some Fibo stuff now. If you can get that, take it. It's a better risk reward. And then you're not relegated on momentum. You're not dependent on someone else buying at a higher high. Now, I guess you could say you're dependent on the correction holding on exhaustion, but your risk reward is so much better on that. So I'm not giving up on these by any stretch, but you can definitely see there's a little bit of lethargy right now. All right. Okay, so let's take some questions. I'm going to be here for another 50. I'm in. Like, there's nothing else to do. We can take a quick look at crude. Let's see. What is up with crude? All right, crude sunk down into the wave a little bit more. I can live with that. Okay. Not that interesting. Euro US. Okay. Pretty nice rally since the sell-off earlier in the day off that 16.5 area. Okay. Dollar index. I'd love to see this thing come down. Come on down. Come on down. Not yet. Not yet. I just don't want it to see a higher high as we talked about in the morning. I want to see that Darvis containment. And that doesn't even, you know, if nothing's happening there, gold is really not going to do much. I'm still very optimistic on FXI. Let me get on over there. We're stuck in that Darvis area, but that's giving everybody plenty of opportunity to build a long position for what I think will be just a quick, inevitable rip higher on FXI on the news that the trade war is indeed over. Is that going to happen soon? I think it will. It's not going to happen tomorrow, but you know that I think this is going to start to become, hey, let's talk. And that may not happen for another 6 weeks, gang. I just think that into August, into September, right? Then you start getting really into that sensitive countdown into the midterm elections. This has got to be, you know, sorted out by then. And again, this is what I want you to keep an eye out for. Everything elevates to the point where finally they come to a meeting of the minds. They go to the table. The U.S. gets some either good or completely meaningless concessions from the Chinese. The administration, like any other administration, this is not pinpointed the current. This administration, like any other, would come back, claim a political victory, and the markets go whew, trade wars are over. Mark my words. It's how every single politician does it. Okay? All right. So that is that's kind of what this is all about. And then let's see. Now, remember, we have upside targets that don't require us to go any higher than where we've gone this morning. That's what exhaustion entries allow us to do. We're not relegated on the market moving any higher than it's already been. And then we could take the lows that have been put in the clearing, right? Or what the current daily candle low is. And this is a really good time to slow things down a minute and say, okay, what are the lows? Okay, 27, 73, 75. And then go project some daily price movement range highs. In other words, head on over to the ES. You take a look at the Thursday price action, average to high, 40 to basically 50 points. Be where this thing exhausts. Yeah, 28.10 initially. Heck, it could be even lower than that. I grabbed the average to the high, right? Calculate all three preferably. So we could see about a 27-point move, about a 40-point move, or about a 50, 51-point move. Calculate all of them because all of them could be potentially where this move runs out of gas. Yes? I think once we get north of, say, 28.10, even call it 28, yeah, about 28.10. Let's see what we have here. What is that? That's what, 27.80. If we actually break 28, right? That's what we're talking about. If we actually break 28, our high up here is 28.11. I think once we get to 28.10, even once we get up above 28 period, but 28 to 28.10, look at what I've drawn there. Those are the previous highs. This is not high-level technical analysis, gang. Anywhere leading up to and through 28.10 is very, very precarious. Does that make sense? Past price action, gang. Nothing more than that. Past price action. Anything above that turns into a very slippery slope. Yeah? Make sense? So I think we have pretty clear sailing up until about that point, and then things get tough. As confirmation from the daily price movement ranges. Okay? Let's see, where did I get the RTY? Sure. Head back on over there. So the levels that I was looking at was 85.1, which is the negative 12, right? And then the other thing that I acknowledged was that the 480 was a really good time frame for that entry, and we could see where this level was. It's 85. 88, basically anywhere between 88 and 83 was fine. Anywhere between 88 to 83. It's a 5-point range. The $250 range, but 85.1 was what I was looking for. Although we had that wick that took us down to 83 and change, and we could have been as aggressive as 88, which was the negative 9. Okay, but 85.1. All right, on the Russell. And all the way down to 83 is fine. But the three levels that we calculated on the Russell, again, remember what we do with the 1697 minus 6.5 minus 9 minus 12. So that's where the 85 looks so good. Darvas level plus the 12-point sell-off. All right, next up is what do we have here? Let's see. We think you're heading up into a bull trap. JC, so you have my logic as to why I think there's going to be resistance there. So I don't disagree. I just want to make sure you guys can see that, you know, the reasoning for that. It's previous highs, major psychological levels, etc. If one misses the first 30-minute trade setup, what do you do then? Oh, well, so now that we're at like 10:23 and we're going into the remainder of the morning, I look for a trend. Maybe it's a 5, maybe it's a 3, maybe it's a 15. I look for a trend and I just wait for pullbacks. That's all. It's just that during the first 30 minutes of the day, I know there's going to be more volatility in the pullbacks. There could be more range extreme movement. There could be terrific opportunities to take advantage of these moves. Oil probably put a little bit of a damper on the party here. Oil bounced off 70 and it's still hovering right above 70. So oil is having a hard time getting back above 70.80, which is the top line of the wave on the August contract. I think people are still referring to a lot of the action on the August contract. But if you're looking at September, oil did pull back pretty well, and it's having a little bit of an issue getting above 69.5. 69.5, 69.60 is a level to watch really closely on that September oil. Oil's having a hard time getting out of its own way. It's probably a bit of a drag on, as someone mentioned earlier, energies aren't a massively heavily weighted sector within any of these index futures, but they have implication across every market, right? I mean, oil is the king of commodities. There's nothing that can, you know, either isn't planted by, harvested by, transported by, whatever, in some way by oil, right? By energy. So, all right, what else do we have here, gang? So yeah, Evie, I would just, at this point, you know, the bulk of my morning is built off what we did the first 30 minutes. Frenetic, yes, but systematic. The first time you hear me do it, it sounds, I'm sure, like absolute lunacy. When you see me do it the same way again and again and again, you go, oh, okay. Okay. All right. So again, very similar. We're actually coming down to some levels that we talked about earlier, whether that be that 820 to 811 area, again, minus 90 and the 50%. We've got the 82 to the 83.5 area on ES. That's what we talked about as far as the entry zone. And then 85.1 on RTY, and I have nothing in the NAS. All right. I think there's a correlation between overnight chop and US chop. Not enough for me to hang my hat on, Easy. I mean, I'm sure there is, because, you know, of course, there's a certain inheriting a risk appetite, but each session has its own thing, right? Each financial center has its own issue, has its own set of issues. So I don't want to always assume. I guess it depends on what it is. But we do, in some ways, inherit a certain amount of psychology from the previous financial centers. Yeah, for sure. All right. Okay. So, gang, I've got to go. But that's the morning for me. I'm going to manage these from here on out. I don't like the Russell, but it's still above my entry, 85.1. I wish I had some NAS. There was a clearing range breakout. There was a 15 and a 30-minute, right, breach for those of you that wanted to buy that. But when I got the opportunity to buy pullbacks, I'm all over it, okay? All right. So yeah, I mean, there were opportunities to get long, but there were breakouts. But when I've got exhaustion buys that I can grab a piece of, then, you know, that's where my attention is going to go. So exhaustion buys in the Dow, exhaustion buys in the S&P, exhaustion buys in the Russell, and this is going to be what I will manage into the remainder of the day, as long as they stay above their key levels. Meaning, preferably staying above their entry, obviously, but then it's a 480-minute setup on the Russell, and it was a 30 or a 60 that seemed to work pretty well in terms of absorbing the correction. 30 or 60. I think 30 would be fine. on the Dow and the S&P. All right. And did anybody grab that NAS breach on the 15 or the 30? Because it was valid, you know, buy only. So that is it. Okay, gang, I got to go. I will see you all later on. That is the entry that I'm looking at. And again, my whole day is set up pretty much by that 30 minutes. At least the first half of the day is set up by that 30 minutes. Okay, gang, have a great morning. I think Neil and David are both around. I don't know if they're going to jump on the mic, but they are around. And, you know, you could see maybe what the two of them saw. I am long. I am staying long. And I really hope that you guys are understanding a little bit more about the way I trade these first 30 minutes of the day. All right, that was fun. I love doing this with you guys in the morning. It's a lot of fun. All right, my friends. And again, if some of that was just like, what on earth just happened, check out the replay from this morning. Check out the 9:30 to basically an hour and a half. So this replay will start at 8. Okay, so just kind of fast forward the first 90 minutes. And then once we get into the clearing between 9:30 and 10, which will be an hour and a half into the replay, check it out. And I'll see if I can't pluck this out. But yeah, check it out in the replay. And we do this every Thursday, gang. Okay? So thank you as always. Long or nothing, gang. 24,890 would be the target for the 811 or 820 YM buy. We've already hit 2790 on the ES. Let's see if we can't get up to 97 or 98 on that ES. I wish I had a meaningful position in the NQ. I don't. I'm waiting for this RT to remember that it's a small cap and it doesn't care about all these tariff shenanigans. So I'll try to be around. I will talk with you soon, and then I'll see you all, I think, a little bit later on this afternoon. Yes? Yes, about 2 o'clock. All right, gang. Until then, great spending the morning with you. Take care. Be good to each other.